That's the episode for those that are not bragging about their EV eco-friendly, 100% eco-friendly car. Alright. I don't want to discriminate anyone. I just want to make every one of you to become more knowledgeable and don't fall for such stupid governments or, I don't know, huge companies cliches that you may be served in. So it's another episode of Blockrevision. In Blockrevision, we are introducing the most important part regarding stock market investing, trading. You have every single at once. Everything is aggregated into one informational peel. So I hope you will enjoy. Let's get into economy view. So economy view, we are starting off with the very interesting chart. You may probably remember this one. That's the reversed repo chart. World's safest dollars rush is recently been observed. As we could find that this chart is making new highs and remaining at the highest levels been ever noted in terms of this facility. So we have observed recently a surge in RRP usage that boils down to the thing that there is an immense demand for safe dollar assets. In another case, if you just make another viewpoint on the case, it's one of the facility that creates a sort of overflow area that allows excess cash that can't be handled by balance sheet constrained banks to flow into money market funds instead. So in this facility, in that term, lets big investors, including market money, market funds, and other huge facilities to park that excess cash at this Fed overnight and earn some interest. For this one, we may find that with this tendency rising up, that may prompt us to think that the liquidity on the market is still something that favors just maybe putting a cash on a sideline right here on an interest rate facility, and that also puts us in a environment where there is a anti-risk parity that cannot be achieved. So we are right now stockpiling cash. Those big whales, big market whales, are betting on cash rather than any other risky assets. That's why unless it won't stop or reverse anytime soon, we may see possibly this chart climbing up. So that will be very interesting to watch if this quantitative tightening unfolds. That it may be important to notice right over there that with this reverse repo eventually will probably decline very fast. Right now we are not suffering from that low liquidity, this cash being grabbed off the table, and I'm introducing you this as to a point that we are still not in this very low liquidity environment where those funds are being taken out. Right now we are still somewhere on this rising curve that still at points that the top is maybe not here, not now. So if this recession will develop eventually, will we have a layoffs wave? There are some voices of economists claiming that there might be the first situation of recession where no lack of employment being be seen. So we really haven't seen that scenario in our lifetime. I'm I individually not really buying this scenario, this premise, as I'm about to get, but yeah, it's getting interesting how it eventually turn out. But as we have already been through the problematic case previous year, that we were about to go through hiking interest rates, but we decided rather to stop and watch. And that was the one of the recklessness of Fed, that this too low for too long policy couldn't really end up optimistic, and that something that right now we are observing right now may have a similar outcome to that. So we are maybe even betting in some way on soft landing, but I would say miracle sometimes do happen on the markets. But if would everyone like to bet on that miracle may happen, you might go bust. So I wouldn't rather expect this time. US and European inflationary dynamics. So that's very interesting chart that recently been introduced by Refinitiv data stream made by Allianz Research, where we can find that there is a different pace and different share of individual aspects making up inflation, whether it's Eurozone or USA. So even if we just bet on central banks hiking interest rates, just have a look at this one. USA and Eurozone right now making up of just 2 to 4% change in inflation caused by rotating this monetary policy into a more hawkish. And we are already through 6 months, if not more, of this hawkish tendency. So right now, we can find that such components as energy, demand, supply are really overriding this monetary policy that is trying to stop any of those power and of those strength. So will we regain the credibility that previously had a Fed in itself? That will be very difficult to say. Right now, Fed is claiming they have all the tools in order to fight this inflation and eventually to bring those valuations down. But if not recession, I don't know what may be the other power that may bring these elements down. So for sure that will take some time for tightening to unfold, but only up to 30% in US and 15% in Eurozone. Those are the components that are demand driven. So if the Fed may assume that the only one thing that they can really impact on is this demand driven power, that's the only thing what they can lower. It will be just one third on in Eurozone. It's about 1/6 of the total initial not initial, but this consumer price index been taken down. Kiyosaki is again back with his crystal ball. I don't know, whenever he's appearing in the media, it's more fun than really a science or education. So right now, in 2013, he's boasting with the fact that he has published Rich Dad's Prophecy, and it's already about years through, and we haven't really got to the scenario he has written over, and he finds that right now is the scenario that may come into fruition, that has been really introduced in his educative for sure box. But if you just listen to Mr. Kiyosaki in 2013, you would miss all of the gains that happened since that time, and there was a massively bullish market since back then by now. So for the present, I wouldn't really take my consideration of his whether it's educational or investments opinions. I would rather propose an anti-Saki ETF instead, as he is betting on oil right now after all of these gains. He just has waken up and betting of oil to gain here. Recession scenario still intact. We have another indicator that is pointing a possible recession. Conference board consumer expectations versus current conditions this time. So typically recessions ensues shortly after the spread between the conference board's expectations and current conditions indicators and bottoms. Market outlook. So we are still in this risk appetite territory. It means that we may still be anywhere close to the possible bottom. Right now, let's get into a crypto outlook, and with this we have an update regarding Mt. Gox, and that's not much of an optimistic one, because we have expected an instant dump and then reversal to the bullish tendency of Bitcoin, but this won't happen in a that fast manner. Those repayments to creditors will be delivered throughout upon a time where it may take even few months, to say at least. So those supply pressure I've been talking about, that is highly likelihood to being met, may be spread over a very long period of time, and it may be something that may burden on this market. So that's something that is not very optimistic for investors. Market movers section. So let's jump into a trading economics, and right here on Thursday we had initial jobless claims that turned out to be as expected at the same level as previously, but it's oscillating between 225 and 250, so it's getting a little bit more crowded right at this levels of 250ish. So it's something to have an eye on. ISM manufacturing PMI from US, it's optimistic and has stopped at around 50ish, 52 points, so it's not indicating a recession yet. So on Friday we have been already through unemployment rate, and this one is showing a little worse gauge, that 3.7 is something that haven't been seen since February, even so hopefully those COVID outbreaks won't return, so we shouldn't have the pressure out of it, but the economic economic environment may be something that may put more layoffs. Maybe not now, because as we watched, there are no plans about it as of yet, made by many companies, but we will track this indicator throughout the whole third quarter. That is for Friday. We also had average hourly earnings, and this one, that is also one of the leading indicator, leading that usually precede initial jobless claims, right now is still at the stable level. All right, so let's jump into a market mover section. The trade idea right now, and with this as thumbnail, just finds. Let's have a look at US oil, USD WTI. At first, let's have a look at some positioning, as it's kind of a knowledgeable verificator. So right now we can find that commercials has been stockpiling their positions to the upside on a very high fast manner, whereas non-commercials or large speculators were selling off gradually. So for now, I do expect that as we didn't have really claimed this 83, 84 area, I would expect USD WTI to drop, especially with breaking through this recent trend line that was of a high meaning for remaining this bull trend. So I do expect USD WTI to still maintain above this trend line, but there will be a bit more like a volatile reaction possibly observed. I do expect USWTI to dive to the levels of 83, 84, somewhere around, in order to scare the market. If the market gets spooked, we'll make a quick reversal and right after move and make another move upwards, especially with this low RSI in place. I do expect this RSI to tumble to around 34 levels, so expect this, and you may even set an alarm around these areas of 36 points, and right after I would expect a quick rebound from there, and then higher path towards 95 USD again. So if I'd like to draw highly possible trajectory, will be something like this, with a lowest risk to be taken at around those levels. So if the price will get down into this support, I would expect this price to rebound. Otherwise, if we just break it much lower on a high volume without any signs of rebound, I would rather expect this one to continue. But without this, there is a more likelihood with USD WTI to still have it's more like a more bulls that will favor the growth other than bears. So I would expect the tension between USD WTI and natural gas to revert. We have broken this trend line of this ratio of USD WTI to NG, but right now I would observe something like this to happen. So I do find there's a possibility, the high possibility of a reversal from these areas of a recent bottom of May 2020, when this ratio was that low. So in terms of trade idea, I just mentioned, remember about risk management. If the price will get as low as here, I will inform you in one of the next episodes. So if you wanna be updated, remember about subscribing the channel. Thank you very much, and see you on Monday. Oh, sorry, on Monday is it holidays? So see you on Friday. See you on Tuesday. Bye bye.